Welcome to Money Matters TV. My name is Paul Mitchell. I'm a commercial banker. I'm your host for this show, and I'm joined by my co-host, John Mason, who's with a company outfit called Seeking Alpha. John will tell us a little bit about what that means, and then we'll have a little discussion about what's going on and how you too can seek alpha. John, what does Seeking Alpha mean?
Seeking alpha means that you're looking for really value investments. Alpha is a term that is used to capture the investment in individual firms and not the action in the stock market that comes from total market movements. Seeking Alpha is also the largest blog aggregator in the world in terms of finance and economic writing.
Okay. But Huffington Post is still the biggest blog aggregator of all kinds, I guess. Not too much in the finance world, though. Well, John, let's go back to the finance world, because that's where you've been in for the last 30, 40, maybe 50 years or so. Just touching about some international impacts that we've been reading about, that type of thing. I hear like Argentina is worse than ever. I mean, 20 years ago, it had inflation of, I don't know, 65%. What's going on there now?
Well, Argentina is kind of at the end of its rope again. It's been in negotiations. It's about $323 billion in bonds that it has coming due.
Wow.
They've got a May 22nd date in which they have to settle by, or they're going to have to basically deny that they can pay. So this is quite a thing that's hanging over the financial markets now.
Who owns those bonds? Does the U.S. own a lot of those bonds? U.S. investors or what?
Well, there are three U.S. investors that are pretty well committed to this particular bond issue. The whole thing. I mean, Argentina has not been in good shape for many years, but the previous president came in and really was pushing some new economic policies and things like that he was really selling, not only in Argentina but also worldwide.
Yeah.
And as a consequence, even though Argentina has had 8 bond failures or defaults in recent years, 8 of them, and yet was able to convince 3 U.S. Major investment banking groups to come in and help to finance these and sell them worldwide.
I see. So they didn't own them, they sell them and make a commission.
Well, they still own a bunch of them.
Okay.
They still they're part of the negotiations that are going on to see if they can reach a settlement. But the economy has really been a disaster. It's not growing, and other debt and the like that is outstanding there is drawing down on it. And right now, they're not paying. And Argentina has come up and said, I mean, the bonds, 100-year bonds, so
100 years,
long year maturity, and it's got a yield initially around came out around 7.9%. So as you know, over the last 10 years,
it's better than most annuities.
9% was a pretty darn good yield, but they had to do that in order to attract people coming in. Well, now what Argentina is trying to do is that we can't pay for 3 years. We're trying to reschedule this so that the first payment that you would get back would be in 3 years. One of the difficulties with that is that the current regime goes out of power in 3 years. So they would be basically trying to lengthen the payoff or any payoffs until they were out of office and consequently did not have to deal with it. And of course, this makes it very unsatisfactory for the bondholders in order to make a deal.
Well, I know one part of the Argentine economy, which I'm a very favorable about, and I'm very a good supporter, is their excellent Malbec wine. Let me tell you, good stuff gets better every year and reasonably priced. But
Sounds
getting
good.
back to the U.S., I've been reading about we have a $3 trillion stimulus that's been going on for the last couple of months. I said, well, how much is 3 trillion? So I looked up what's the GNP, gross national product, economic output of the United States for a whole year. 21 trillion. 3 compared to 21, 1/7. That to me seems like the 3 trillion represents 2.5 months of complete US GNP stoppage. Everybody out of work, nobody making one transaction of any kind. And I read it's only been down 5, 10%, unemployment 20%. That's nothing compared to 100% for 2 months, 2.5 months. So what's going on, John?
Well, I mean, this is again the effort to try and get money into the economy to help people that are unemployed, that have been laid off, and to help small
I
businesses
know, but
and
it's
other
the
things
amount.
like that
It's the
get back.
amount. It represents 2.5 months, 100% of GNP.
Yep, yep, and
And our country has not stopped at all.
that's
I
right.
gather it's 80 to 90% of GNP continues to go on.
That's correct. That's correct. But it's still, I mean, you've got a lot of unemployment coming on here. They're going to say they're saying that the second quarter you're going to see the biggest rise in unemployment since the Great Depression. So you've got a lot of economic misery that's potentially coming along, and so to get money out there and trying to get things going, and then you talk about $3 trillion. The Fed's balance sheet has increased by $2.5 billion. I'm
Billion?
sorry, $2.5 trillion
Brilliant.
since February 26th of this year. So it's going through a substantial rise. And of course, this is one of the things that the government has, the federal government, is that the Fed can buy that and put the money out into the banking
I
system.
know. I'm not an economist. I'm just saying, though, $3 trillion in a 2 month period, when the economy is still 80%, that means the economy should have increased by $1.5 trillion.
Well, it tells you how much people are withdrawing from spending. I mean,
Well,
nobody's
they
spending.
haven't measured that downturn yet. Then
Yes, yeah, yeah.
interesting.
And it's affecting everybody. I mean, it's retail sales, as you
Yeah.
know, is off tremendously. And when you get the cash flow
Yeah.
not flowing into the retail industry, what do you have happen there?
Well,
Well, you've got a lot of
yeah.
retailers that have huge amounts of debt, like J. Crew, and J.
Mm.
Crew declared bankruptcy on Monday, and there are a lot of other Neiman Marcus is
Yeah.
on the line right now that people. So, you
Yeah.
know, you've got a lot of potential failures out there,
Sure.
defaults and others, and like Argentina. So
Yeah.
the whole world right now is kind of on the brink of catching up with all the fantastic amount of debt that has been
Yeah.
issued over the last 10 to
Well,
20
John,
years.
we have a question from one of our viewers that's a little more personal to him than the world economy. Joseph Nance of Philadelphia asks, what is the 30-day rule for buying back stocks? So, John, I know you're not a stockbroker. And maybe you're not even a very big investor that buys and sells stocks all the time at all. But anyway, I thought I'd try to give our viewer the answer to the question because it is kind of a nuance.
Terrific.
So what it is, the IRS has rules about obviously how you can make deductions and pay capital gains, have capital losses, and that type of thing. And of course, capital losses can be used against all your other income. So if you make $100,000, but you have a capital loss of $30,000, you only pay taxes on $70,000. It can be a very attractive situation. You don't like to lose money, but you should save taxes. Anyway, what the 30-day rule is that if you sell a stock, okay, and are looking for a capital loss deduction on your income tax. You cannot have bought that stock within 30 days before you sold it or 30 days after. You may say, well, how could I buy it 30 days before I sold it? Okay. Well, you could, yeah, you could buy it in anticipation. You could buy an option on it, that type of thing. There are lots of various ways. I mean, the more typical thing would be you sell a stock today to take a loss for tax purposes. It's advantageous, right? You buy the stock back the next day. So now your position hasn't changed, but you've got you've got an IRS tax advantage. IRS wanted to close that loophole. So there you go. Another similar description of it is also called a wash sale. So by washing it, you say you sold it 1 second, you bought it back the second. What's your net result? A wash. So a lot of opportunities for selling stocks at a loss these days and for having wash sales. But the things will turn around and the stocks will go back up again. So hope that answers your question. And if you too want to send a question to Money Matters TV, here's how you do it.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
And now I'd like to introduce our featured guest on the show, Mark Rybarczyk of Chefcipes. Chefcipes. Tough way to say it.
Yep.
Mark, welcome to the show.
Thanks, Paul. Appreciate it.
So, exactly what does that mean, and how do I correctly pronounce your last names?
To answer the second question first, it's Rybarczyk. So you were right.
Okay. Well, my mother was Jarzabowski, so that wasn't too far off. But so what is Chefcipes?
So Chefcipes is an online platform where chefs and restaurants can build their own online cookbooks, and they can sell their individual recipes to customers, anyone looking to recreate real meals from actual chefs. So then, customers can build their own cookbooks, one recipe at a time. And then the other thing that we're doing is we're building an online directory of restaurants. And amongst other things, we're providing them with the opportunity to tell their story through video.
Cool. So you trying to make money doing this?
We sure hope so.
Who pays you money? Who's going to pay you money?
So the business model, there's a few ways to make money. I mean, the chefs or restaurants are actually selling the recipes, so we take a cut from there. Okay. We also have a lot of opportunities. We literally just launched about a month ago, so there's a lot of opportunities coming up for advertising, due to the nature of the space. With recipe sales and restaurants, so on and so forth.
Restaurant, kitchen equipment, all like gourmet stuff. Yeah. Right.
Mm-hmm.
Well, I like the concept. So what's your background? How'd you get into this?
So, good question. My background is actually in finance. So I spent 20 years in finance. 15 of those years, I had a mortgage banking business, a boutique mortgage banking business, if you will. We were licensed in 7 states. I had anywhere between 10 and 15 employees at any given time. But, about the late 2000s, I was getting rather burned out from that business. And I had a real fascination for technology. So I had the opportunity right around 2010 to join a startup. And I ended up leaving the mortgage business. And I could tell you the first startup that I joined didn't really work out so well.
Yeah.
Kind of crashed and burned rather spectacularly. But again, there's a lot of things to learn from a situation like that. So
Absolutely.
one of them being, I can tell you, one of the things that actually happened was we were outsourcing all of our technology, and we were trying to be a technology company, and that didn't really work out so well. So we were spending a lot of money, and it kind of provided me with the opportunity to take it upon myself. And based on the one product that we were trying to do is to teach myself how to code. So back then I taught myself how to code, and
Wow.
I completely reinvented myself as a web developer since then.
Huh?
May I jump in here a minute?
Sure.
Sure, John.
How did you, you've only been in business a month. What was the process that you found in terms of starting this company? Did you work with the Angel Finance Group to finance it, or how did you put the pieces all together to get into business?
No, and that's a good question, because in the past I would have said, yeah, you need money from angels because we have to pay these engineers to build the product that we want. So with having the ability now to code and build my own website, build platforms, I've been building e-commerce business platforms for the past 8 to 10 years. So that really provided me with the opportunity to build it myself. You can put something online, other than your time to build it, it's relatively inexpensive to host a website or a platform. There's a lot of inexpensive ways that, in a lot of companies out there that are willing to help, where you can kind of pay as you go, which is really, really beneficial to help you scale.
Now, did you work with anybody else in terms of developing your ideas, or was this kind of a sole project for you?
No, this one in particular was my partner. So my partner's name is Chris Lamara, and he came up with the idea maybe about a year ago. He was kicking it around. Started really as an idea to help chefs to train their staffs. He comes from the restaurant industry, so there's a lot of turnover in the kitchen. So, he thought that if we filmed a chef making dishes on their menu, they could give it to their new kitchen hires, tell them to go home, watch the videos, come back in a week, and then start cooking. But then we kind of realized that, there's value in this to the home cook as well. So one of the things that you can imagine if you're traveling, which maybe right now is tough to imagine because we're stuck at home. But imagine you had a great meal somewhere and you really wanted the opportunity to recreate that at home. So you ask the chef, hey, would it be okay if I have this recipe so I can try this at home? Chances are he's not going to give it to you because, number one, he's working. Number two, he probably doesn't have it written down in an extra copy right there. So we kind of thought that this was a problem that could be fixed. And, what we wanted to do was give the chefs, the restaurants, the opportunity to add their recipes, build their own cookbooks, and sell the recipes to maybe, foodies who are looking for a little bit more than, some of the free recipes that you might find online.
Well, and your timing is really quite exceptional. Did you, you've done this before. Have you noticed a change in terms of what you had to go through now relative to earlier experiences?
Well, yeah, I mean, just the fact that I have so much more control over, how to build things. If we need something, I can build it right away. In most cases, it's not always, there's a lot to it, but yeah, we were able to pivot, or put on hold the original idea, which was not to sell recipes directly. But it became pretty evident maybe late February when this pandemic looked like it was going to be here for a while. We started thinking, how is this going to affect the restaurant business? How is this going to affect the chefs? And we decided, let's kind of accelerate another idea that we had, which was to provide a platform where they can add their recipes and then sell to either their customers or really open it up to global customers who might be interested in their recipes.
Thank you.
So if I want to buy a recipe from some chef guy, give me a rough idea. How much is that going to cost me? 50 cents, $10, just a degree of scale.
Yeah, so we give them the opportunity to price it themselves. I mean, we have certain price points that they're going to choose from. It can be free, or it can be anywhere from $2.49 up to $19.99.
Wow. So what do you get for $19? Look at the ingredients and description of a page and a half.
Yeah, you know, I mean, I think it depends on the complexity of the recipe. It depends on the ingredients. You know, maybe the chef's experience. You know, you're tapping into that, so maybe it is a little bit more difficult to make. And you know, he's providing step-by-step instructions on how to make it.
Mm-hmm. So how do you differentiate? I mean, I can think of a little bit, but from all these other things on the web, I get a whole bunch of recipe stuff and videos and that type of thing. Chef John, and Rachel Ray, and I can look up, Julia Child's stuff, et cetera, et cetera, et cetera. So what's the differentiation?
So really, I mean, we're looking to work with real restaurants that you go to, real chefs that cook those meals. So, you know, kind of with my imagine you've traveled somewhere story, you know, imagine I'm from Kennett Square. So let's say I go to a certain restaurant that has
Tallulah Garden.
There you go. So say we go to Tallulah's Table. So anyways, imagine they had a great mushroom soup because we're in Kennett Square and you wanted their recipe. And they said, you know what, Paul, I can't give it to you right now, but you can go online to Chefcipes and you can purchase it. And in the meantime, you're supporting me when you can't be here.
Okay. Sounds interesting. So in your venture here, have you taken on any investments?
We have not. So far, we've bootstrapped everything, and we'd like to continue bootstrapping as long as possible. But, you know, again, if the opportunity comes along where it's going to help us accelerate our marketing efforts, our hiring efforts, then, you know, I would certainly be open for discussions. You know, I've been down that road before, and, you know, it's not always the best thing, but, you know, when there's a need there and if the business is going in the right direction, I think that it really makes sense.
Sure. And the right people.
Right.
So what's your take on the restaurant industry today? I mean, all kinds of stuff about it.
Yeah. So there's a few things. I mean, you know, number one, I love how so many restaurants have figured out a way to offer the takeout only and stay open for their customers. I mean, that's a great thing, you know, to keep the lights on. You know, the second thing I'm seeing a lot is that you're seeing people on social media really wanting to support their local restaurants.
Yep.
And they want to buy gift cards, which is great and well-meaning. But one thing that I worry about is once the restaurants open back up, now they have a debt, so to speak, that they have to honor to a whole slew of customers coming in using gift cards and to pay for their meals. So that may lead to a longer recovery period for the restaurant. So, you know, we're looking at what we're offering is, hey, look, this is a sale. You're getting that now. You don't have to repay anything. And,
you're getting value.
You know, I guess one other, right. And then one other thing is, you know, like we talked about earlier, is this is a time for change. You know, like necessity is the mother of innovation. I believe that owners that look for alternative avenues of revenue will be ahead of the curve.
Yeah.
This is not a time to be stubborn with the old ways of doing things. And we're not here to say that we're the answers to all of your problems, but, you know, we're simply hoping to provide a new revenue stream for the restaurants and chefs, maybe in a way that's never been available to them before. And it opens their customer base from a local one to more of a global one.
Well, as I said to you before, Mark, this to me innovation. I just talk with an awful lot of other young people that are making innovations like you're doing, finding a missing market or something like that. And it's just amazing, I think, what we're going to find in the next 2 or 3 years in how all this has changed things. Just fascinating.
Yeah, and this is just one, it's not a small industry, it's a large industry, but you're going to see innovation obviously everywhere.
And that's important. I mean, I'll give an example. Yesterday, Cinco de Mayo, I and my significant other and a jillion other people said, "Oh, what a great idea to do a little something different, a little celebration type of thing." There's this lovely little Mexican restaurant down the road. Let's call them up, go online, and order something from them to help them out. Great, no problem, et cetera, et cetera. 6 o'clock pickup, I'm there. 15 people wearing masks, et cetera, et cetera, et cetera, et cetera. And by 7:30, I was out of there. They had no clue what was going to go on, or they just said, "Come on in," and whatever. I don't know, but there were a lot of people trying to help. That's what it was in my book.
That's great.
And a lot of frustrated people, but there was very little gruntleness in terms of, "What are you guys doing? You're crazy," or whatever. People just sat and waited, and we're happy to be part of it and have a little celebration.
That's great.
So, I mean, they have good stuff. I mean, they could probably sell some recipes.
Yeah, let's hope so. Hopefully they're watching.
Yeah, yeah. So, in the future of the industry itself, innovation. I mean, do you think? If 30% or whatever it is, 40% of the restaurants go out of business and stuff, isn't it a great opportunity for either the remaining restaurants or new restaurants to come in and suck up that vacuum? Because Americans love to go out to restaurants.
Yeah,
They
absolutely.
go out more than they buy at the grocery store. I understand.
Yeah, and I think there's a lot of questions that we don't even know yet. Like, how are people going to react when things open back up? How many customers can a restaurant accommodate at the time? It might be half of what they were used to.
Sure.
And that kind of parlays into, what are the prices of commercial real estate going to look like? Are they going to be able to afford their spaces they're in?
Yeah.
So yeah, there's a lot of things I think that we don't know yet. But from what I can see is, not many will. Well, many will survive, many will not. But the ones that innovate, or however that looks, will position themselves to better succeed in the future.
So much depends on what the trajectory of this is going forward. I mean, the people talking about a second wave coming in the fall and other things like that. I mean, goodness, you stay loose, you stay doing what you know how to do, and promote it. And it just, again, it's so much is going to depend on what happens over the next 6 months to 2 years.
Okay, well, it's going to be an adventurous time. So, Mark, thank you very much. Congratulations on an innovative concept.
Thank
we
you.
applaud you.
Good
Thank
luck,
you. Best of
raising
luck.
money.
We're going to be closing our show for at this time, and just want to remind our audience that on this show, your money matters. Good night.